Okay, good morning everyone. Welcome to another video. In this video, I'll be teaching about entries. Okay, being able to find an entry, because I've realized that some of us have been able to identify our point of interest, what we call POI. Okay, point of interest. Your point of interest can be a major resistance, it can be a support, it can be a supply zone, it can be a demand zone. Okay, those are your point of interest. Okay, so I'll be showing you how to pick entries. Okay, when you have confirmed the direction of the market and you want to enter that particular pair, you want to take the trade, I'll be showing you how to get the entry. So the first thing you need to do is to do a top-down analysis. Top-down analysis in the sense that you start from a high time frame, probably 1 hour or 4 hours time frame, but I strongly recommend you start with 1 hour time frame. Okay, so I'm going to switch to 1 hour time frame here. All right, now it's on 1 hour time frame, so let me just adjust this. Yeah, so now that it's on 1 hour time frame, we can now see clearly the direction of the market. You draw your trend lines. So this market is clearly in an uptrend. Okay, it is in an uptrend and it has been buying for quite some time. Alright, so we have it there as our uptrend. You can see how market has reacted to the trend line. Okay, now you mark out your point of interest. Okay, in the trend line, there's trend line support and trend line resistance. In this case, we have a trend line support here, so you just mark out the zone, just select a region of the candle, of the bear candle, which is the red candle, and then you mark that zone out. Okay, like I've done here now, just mark it out to the rectangle, and then you do the same. You go to the upside. We can see a break of structure here, a break of structure to the upside here, and a rejection that occurred there as well. Okay, then we can see lots of rejection wicks here at the bottom. Okay, at this point we can see rejection wicks here that formed. Okay, so these rejection wicks are showing that it is either a support that has happened there. Now if I go to lower time frames, you can see clearly that what has happened there is a support, because the market pushed down to this market was able to push down to this green bar here. Okay, it was able to push down here, bought to some extent, and then sold again, and then the market was also rejected at this bear candle, leaving a long lower wick, and the market has been buying since. Okay, so it's very possible that this market is going to continue buying, breaking the previous high. The previous high is this particular high here. Okay, this is the previous high. This one here, okay, is the previous high. It's possible that this market is going to buy to break this previous high. So now we know that this is an uptrend. Okay, now if you want to trade the reversal, you have to wait for the buy momentum to be over. Okay, so you go to your lower time frame, leaving these drawings we've already drawn here. We go to lower time frame. Let's go down to 30 minutes time frame. So we have it here at our 30 minutes. You can see that there was a region of support here. There was a region of support here. Okay, you can see it there. There was a region of support. Market came and tapped into this zone and then reacted again to the upside. Okay, so we mark this zone out. This is support. Market reacted and it's buying. All right, good. Now the next thing we look at is the order block. I'll make a video on order block where I would explain how to find high probability order blocks. Okay, so I'm going to zoom in and I want you to look closely. Okay, this is a high probability order block. Okay, this particular bear candle here is a high probability order block. This one here, it is a high probability order block. Why is it a high probability order block? It is a high probability order block because the the wick of the bear candle is higher than the wick of the previous bull candle. Okay, you can see it here that there was a little, though it's very very tiny. Okay, it's very tiny. You can see it here. Let me straighten this. Yeah, sorry. Yeah, okay, so you can see something like this. Now this is what we call an inducement. Okay, when the market buys up to take out every liquidity there, every stop loss that is there before it starts selling. Okay, so we mark here at X, which is our inducement. I'm going to mark here with X here now. This is our X. Yeah, so we have our inducement there. Yeah, let me move this around. Okay, let me just leave it there. So we have X there as our inducement. Okay, now what we need to do is to highlight the upper wick and then the lower wick of the bear candle, just like I've done here. You can see how I was able to select it. You see that I was able to select it. So you select that the whole candle, select the whole candle. Okay, this kind of entry is called an order block entry. Okay, now what will make it different from a weak entry is just you filtering this. Okay, is you filtering this your zone, sorry, is you filtering this zone to the weak. You allow it to only cover the weak, just like this. You allow it to only cover the weak. Okay, once you've covered the weak with it, then okay, you can now say that this is a weak entry. All right, weak entry, I mean, it's not like WEAQ, WICK. Okay, just like I've selected here now, you cannot call this a weak entry because you are taking note of this POI, which is the point of interest. Let me specify it here. So we have it as your POI, point of interest. Okay, this is your POI here now. Now you can extend this POI to the whole candlestick, to the whole order block. All right, you can extend it to the whole of it so that you can easily pick your entries without having to miss out from this trade. All right, so that's how you do it. Now you can now use your position block to set your entry. We are going on a short, so we'd enter somewhere around the week of this bear candle that has this momentum. Okay, so we use this one and then we select anywhere there and set our TP to probably the first, to the level of support, and then we set our stop loss just above the previous high, so that if it's going to break this previous high, we know that it is a break of structure that's occurred there and the market is ready to continue buying. So since we are selling, we set our stop loss just above it. All right, so that is that. Now if we use our Fibonacci retracement tool, like I taught us before how to use the Fibonacci retracement tool, you'd find out that our entry is around probably 68% or 50% entry zones. So let's see, we take from our swing high to our swing low. There. Oh wow, so this is a very, you can see how the price even reacted. Like the price reacted at at zone 50. Price reacted as, let me shift this here. You can see that the price reacted at zone 50. That was where the retracement started happening. That's where retracement started happening. And I told you what Fibonacci is used for. Fibonacci is used for retracement. Okay, so you take from the swing high to the swing low in a downtrend. Okay, for you to get your re-entry. So if you are taking a re-entry here, all right, your re-entry will be at, remember the entries I gave us at 61.8% and 50%. Those are the high probability zones. Okay, high probability, I mean, are the most reactive zones for a retracement to occur. Okay, within this 50% zone and 61.8% zone, and you can see how price has reacted to this zone immediately. Now you can see what is forming here now. Okay, the same pattern that was formed at the upper POI is the same thing that is about to form here. You can see how it has created a high wick here that took out the previous high of that bull candle. Let me zoom in so you see it clearly. You can see the same thing that happened here. Okay, you can now mark out your inducement again to tell you that trading repeats itself and occurs in patterns. So you can see how it took out inducement here. Okay, and then it bought above the previous high, but now it's trying to close below it. So you take out your entry at the week. The same thing that happened here also. Okay, the same thing that happened there. You can see that the pattern here is the same pattern as what is forming here, though this candle has not closed. So you have to wait for this candle to close for you to confirm that this is actually going to continue selling from here. Alright, so once you've waited and the candlestick has closed, you have confirmed that it's going to sell from there, then you can now take another entry. Okay, set another entry here so that you not miss out from the whole bear run. Okay, then you set your stop loss. Okay, you set your stop loss at the beginning of the week. Okay, that's how will I explain this now? Okay, yeah, so you move it to the beginning of the week, okay, of the bear candle that took out the previous high, which is this place that I marked as. Now to the beginning of it, that's the closing of that particular candlestick. You set your stop loss there. Okay, because there are times that the market will move. Okay, it will buy just like it's buying, like it has already triggered. Okay, if you set this order on an exchange, it has already triggered. Okay, so it will take some time for the market to go up to react to that zone, triggering the entry for the other one, and then continue selling. All right, so that's how you take your entries. You first of all check the trend line. Okay, use a higher time frame, probably 1 hour like I've used here. Mark out the trend so that you know the direction of this market. Once you've done that, you now go to lower time frames and then check for your support or your resistance levels. Once you have gotten that, you now check for inducement and then your order blocks. You check for order blocks, mark out the order block, the entire order block. Okay, mark out the entire candlestick, mark it as your POI, set your entry within that box. It doesn't have to be at the end, it doesn't have to be at the middle, it doesn't have to be at the tip, just within the block, within that rectangle you have drawn. Okay, and that is how you take your entries for an analysis you've already done. All right.